This is an update on the gold market. Is it about to lose its luster? Gold had a huge rally. And part of the reason that gold was rallying was because investors were getting ahead of what they thought would be tariffs on the metals. Well, it turns out that the metals are exempt. Gold and silver are exempt from the tariffs, and a lot of gold has been accumulated in advance, and that puts a lot of supply out there on the market. Now, gold has still gotten a bid as the stock market has fallen very sharply as a flight to safety, but those rallies have really have had a hard time holding now. And now we're in a situation where margin calls in the stock market are going to bring sellers in everything as there's a flight to liquidity. So that's an important thing to consider as we look at the gold market. Note this is gold only. The silver analysis has been updated for members. And if you want to see that, please become a level 2, 3, or 4 member at askSlim.com. So let's take a look at this gold chart, which is going to be quite telling. What we see here is gold in with our cycle analysis on the bottom, and we have silver overlaid in there also. One of the important things to look at as we look at this market is that the momentum condition right over here on our slim ribbon on this, on our reversal scout on the weekly chart has turned bullish way over here after this diamond. Then on the breakout, it really began to soar. So that was at around 2,700. Our upside target for the next couple of years was around 3,200, though we thought that it would not get quite this high this year. We thought that would probably be next year. But here we are as it got up to there in a panic. And you could see this week has this shooting star right there. Now, the cyclical patterns, as you see on the bottom, and what we're looking at are this blue minor cycles right in here. You can see where that was. We call that swamp. The reason is because this corrective period could not fight the big upward momentum that was in here as gold was being accumulated and a lot brought into this country in advance of this tariff situation. So the corrective period that we're looking for, well, for the intermediate pattern, there's no sign that has come yet. Once that does come, we'd expect a drop down here into the 2800s based on the present support level. Right now, we're just talking about the next few weeks as the situation is changing for gold in that there's, as I said, this big supply overhanging right now and the potential for sellers coming in who really need to raise money. So we want to look at the short term for that. So I'm going to switch over to the daily chart right over here. And you can see on the daily chart the magnificence of the cycle rhythms that are in here. And each of these corrective periods are, where these yellow ovals are, and you get this downward movement. So right now what we're looking for is the next 1 or 2 weeks on the downside in the gold market. It's really in a lose-lose condition here because it's either if the stock market keeps going down, then the margin calls are likely to put a lot of pressure on this market. And also, if the stock market stabilizes, then it loses its flight to safety bid. So right now, it's in a condition where it could fall pretty hard. We're looking for a downside in here over the next 1 to 2 weeks. This is 3,020. Looking at that level, and this level right over here is at around, let's say, 2,980. Those are the downside short-term targets that I think we could get to on the downside. And if it really does get worse than that, it could get back down into this area around 2,900 where all of this trading was right over there. Not sure that it could get down that far, but I think that there's a short side trade in here. I have that short side trade on right now. And I do believe that this is a high probability. Again, when you get into these periods at the end of these cycles right over here where you have a dominant cycle coming down and the minor cycle coming down, that's where you get some pretty good corrective periods. You saw that right in here where they were both nesting right there, and you saw the market peak over here and then struggle all the way through that period over there. So we're looking for this decline in the gold market. And again, it would be reasonable to see it trade under 3,000, giving up $100 or more just in this near term. So that's what I wanted to show you in the gold market. Here we have the weekly right over here, positive momentum. We have the daily over here, positive momentum, and just this small corrective period that we're looking at. Right in here for a short-term trade. Very much believe that it's in this lose-lose condition and about to lose its luster and selling come in. We'll see how that works out and how deep the downside resolves itself. That's it for gold right now.